Hello, this is Ian Bratt speaking, CEO of MonyWize, and this is the second part of an introduction concerning the MonyWize software platform, and it's designed to give customers and potential customers an overview concerning the product. Previously, we used the example of Mr. and Mrs. Test Customer. We had them complete a free analysis. They looked at their mortgage and they looked at their consumer debts. They looked at the platform, and based on the data that was provided at that time, the mortgage interest would be reduced by $89,000. The consumer debt interest would be reduced by $6,400, and the total interest saved would be just under $96,000. They decided that for a subscription of $29.99 a month, which is less than $360 a year, they felt that less than $360 a year was worth the potential saving of almost $96,000. And so they became MonyWize customers. Again, we asked you to prepare in advance for this presentation by gathering some of your records, and I would highly recommend that before you begin completing your own analysis that you gather these items together. So as a customer, you can go to MonyWize.com. In the top right-hand corner, there is the customer login, and you can enter your username and password. In the event that you have forgotten your password, you can click on the link and retrieve it. And this is the opening screen which a customer would see at the customer back office. There is a section for personal information. You can redo the free analysis at any time should you wish, or you might want to show a friend or colleague what you're doing. You can then access the MonyWize product login, and by clicking on the area which I've highlighted in red, you can get access to the software. And here it is. We're opening the very first screen. If you haven't already reviewed the tutorial video, would highly recommend that you do that. And let's get into the business of actually entering data. This is the very first screen. This is the income and wealth acceleration account details. And the first thing that we'll look at is the wealth acceleration account. This is your primary account that you would use for the income and expenditure, the money coming in and out of your household. Now, it does have the opportunity of being a line of credit if you have a lock facility available to you, but more likely it's probably going to be a regular checking or savings account that you will use. I'm going to set this up as if it is a checking account. I've begun with a balance of $3,000. This is a non-interest bearing account, so that it is just a regular checking account. There is also provision there if you want to make a life insurance product as well. You'll notice there are lots of question marks. By hovering your mouse over the question mark, you could get more information and intuitive hints to any of the items that you may have some questions concerning. So the first thing I'm going to do is set up the basic working account with that balance of $3,000. The next section is any other bank accounts, and we can add bank accounts to this. We give them a name and a balance. I'm going to set up a small savings account. Initially, that's got a balance of $2,000, and I'm going to put some money aside each month. I'm going to put $100 in there. In fact, this savings account isn't even interest-bearing. I've got zero interest there. But on the first of each month, automatically, I'd like $100 to go into that account just to create a little contingency fund for eventualities. And as far as this plan is concerned, the date of this plan is July 24th. I'm going to have that start on the 1st of August. Okay, so we've got a main bank account with $3,000. We've got a savings account with $2,000, and every month we're going to put $100 into it. Then I want to look at the income that's going to be coming into my household, or rather the test customer household. We have a screen there. We can enter a description under the name. We can enter an amount. we can have the interval, and we can say what day of the month it arrives, and we can also have a start date and an end date if we can predict that. I'm going to set this up as if Mr. Test Customer and Mrs. Test Customer are both paid twice per month. The way I'm going to do this, though, in case the amounts vary, I'm actually going to have them set up as two separate payments. I'm going to have one for Mr., a second for Mr., one for Mrs., and a second for Mrs. The man gets paid on the 1st and the 16th of the month, and his wife gets paid on the 5th and the 20th of each month. Additionally, you could set that up automatically to be twice a month, or weekly, or every 2 weeks, quarterly, every 6 months, or even annually. I prefer the concept of having two payments which are monthly apart on two different postings. So I've now completed the income and wealth acceleration side of things. We can see my wealth acceleration account, which is going to be my primary functioning tool. I've got that savings account that I've set up, and then I'm showing the amount of money which is coming into the household on a regular basis. At the bottom left-hand corner, I would hit Save and Continue. Now let's begin to look at the money that goes out. We'll talk about the consumer debts and the household expenses. First thing that we're going to do is look at the consumer debts. In this section, we would list all the monthly consumer debts that are owed to financial institutions. And it says, for example, car loans, credit, investment loans, student loans, etc. You'll see we can give them a priority, a name, the current balance, the interest rate, the payment amount, and when we make payment. So in this example, the first thing here I've put in is an auto loan. It's $25,000, interest rate is $5.99, and I have a total payment of $483.20. It's due on the 27th of each month. I've got a second car loan here. Oh, can you see at the top of the screen, it put the first one up there already. Here's another one, car loan number 2, auto loan number 2, $10,000 at 9.99%. The payment on a monthly basis is $322.62, and it's due on the 19th. Now, because I'm doing this test example on July 24th, then the next payment is going to be due on the 19th of August. We'll give test customers a Visa credit card. We'll say they've got a balance of about $7,500. It's almost 13%. It's due on the last day of the month. Finally, we're going to have a student loan there. I've given that a priority number 2 because there was a deferment that was allowed on that, so there's a degree of flexibility with that. There's $15,000 remaining outstanding. I've got an interest rate of 6.99. Total payment is $359 a month, and again, I'd like that to go out on the 1st. And I'm going to hit the Save button. So there's the consumer debts entered for Mr. Test Customer. I'm now actually going to jump because in the screen order, the next thing that would be down there would be the household expenses. However, I'm going to jump down to mortgages so that I can take care of the liabilities first. And so here's a mortgage. I'm going to give that top priority. We're going to give it a name, the principal amount, and also the balance. And we're going to say this is a brand new mortgage that started in July. Okay, let's enter the details. So there it is, that's home loan. The principal was $175,000, and because it's just started, that's also the balance. It's got 30 years to run, 5.5%, and the due date is the 4th. So the next payment, for the sake of this example, that we're going to make on the 4th of August, though very often if you take a new mortgage in July, very often the first payment is until September, but let's not let that get in the way. The monthly payment is $1,075, and we're going to say that goes out on the 4th. So what do we now have? We've got our consumer debts, we've got our mortgage. Let's begin to look at our household expenses. The screen we can click on, and oh, and by the way, please note that you can add as you need to. If you get a new consumer debt, you can add that. If you get a second mortgage, you can add that by clicking the add features. Let's begin by adding some household expenses. We can give them a name, we can give them an amount, we can look at the interval of how frequently we pay them and when we pay them. And if we know that it's going to come to an end, we can give it an end date as well. I've already entered 2 in there. I'm lucky enough to be able to pay, or rather Mr. Test Customer is lucky enough to be able to pay his property taxes on a monthly basis instead of having a great big bill come. And he also has HOA, Homeowners Association, which again is paid monthly. And they are paid monthly. They're due to go out on the 4th of August. We have electricity here for his power. I'm going to estimate that at $120. That's payable monthly. It's due on the 13th. This is an example of one of the reasons why it's important to maintain the software on a regular basis, because we know that his electricity bill is not going to be exactly the same every month. May find that during the winter or even during the summer, due to seasonal conditions, maybe he runs his heating, maybe he runs his air conditioning, maybe he has a whopping bill in January because of the extensive Christmas lights that he has outside his house. I don't know. Point being is, it's important to go in on a regular basis when the bill arrives in the mail to be able to say, okay, the payment that's going to go out on the 13th of next month is going to be, and you can make an exact record of what the price is going to cost. So you can see there that I added electricity, I also added water, a home phone, a cell phone, and all of those were payable monthly on specific dates. We can see 13th, 17th, 20th, 23rd. I'm now going to put in some groceries. They go shopping on a weekly basis, and they go to their local grocery store, and you can now see that I put that estimate weekly. And because it's on a weekly basis, they're going to have to go this week, which is why it's within 6 days of the original date here. I then went through and added a lot more expenses, some of which were due weekly. You'll see there movies and plays. They have date night once every 2 weeks. They go out and they give themselves a budget of $30 to go do that. They have their prescriptions and a number of other things. I'd highlight to you the last but one entry is, of course, their MonyWize subscription, and need to take that into consideration as well. This list is entirely up to you. You can make this as detailed, and you can get into the nth degree of detail if you choose. The more accurate that your data is, the better, clearly. However, you can give this as much descriptive information as you want. So we've now completed the household expenditure, and we're also completed the mortgage and the debt. The very last thing down there is the ability to add a credit card for consumer debt and household expense consolidation. This is a section where if you didn't want to go down the expenses in so much detail, what you could do is use a specific credit card and make sure that every month you pay that balance off. So you would train yourself and have the discipline to use a credit card for all of your expenses. Then when that credit card statement arrives, you'll have a couple of weeks before you have to pay that bill, and you're going to pay that bill off in full. And so that would be one way of using a consolidation method to pay off the incurred expenses. Okay, once you've completed that, down in the bottom left-hand corner, there is a button to hit Save and Continue. So what have we done? We've taken care of our bank balances, we've taken care of our expenses and also our liabilities, our debts and our mortgage. What we now like to look at is our wealth accumulation. We're going to suggest that once the mortgage is paid off, we're going to look for an investment which is going to have a similar return to the debt that we were paying. That will begin once the mortgage has completely been funded. And in addition, we can add any other investments that we may currently have. So this section for the mortgage interest is it's an illustration, it's a potential. MonyWize does not deal and sell investments. That is up to you and your financial advisor. However, once you have that information to hand, and this is a very strong tool for your financial advisor to assist in identifying how much discretionary income or funds that you have that you could invest, that's where we could use this. But this is an illustration of what you could do. In addition, we can add investment accounts. So if you've got money markets or CDs or retirement accounts, that's where you would be adding this. And so I'm going to add a money market account here. It's currently got a balance of $500 because I just opened it. It's got, just over, well, not quite 2%. I'm going to put $100 into that on a monthly basis on the 6th of each month, and we'll make sure that that money goes in, just to, again, to build a degree in a small nest egg. And again, at the bottom of the screen there, we'll have the Save and Continue button. But before you hit the Save and Continue button, notice that it's saying to you there that the average amount of discretionary income, don't forget the discretionary income is the surplus once we take all the monthly money coming into your account versus the monthly going out. What's left over? Well, in this case, there'd be $1,583 left over. However, you can say an amount which is a maximum that you want to apply to the wealth acceleration accounts. You might say, even though there's $1,500 there, to allow for contingencies and to give myself a little bit of buffer and space, I'm not quite going to go to the maximum. I'm going to set a personal maximum. And in this particular example, I'm setting a $1,200 maximum. And then that gives me maybe $300 or so to play with and to meet unforeseen circumstances and to create a degree of flexibility. But then hit the Save and Continue button. And you can see that in this particular example, it then tells you that the maximum monthly discretion has now been applied. Now, anytime you can go back and change these amounts. The software is totally dynamic, gives you an opportunity to make changes and adjust. Again, this is a reason why you need a monthly subscription, because quite literally your circumstances are going to change on a daily basis. And there we have it. We have a financial review. We have a summary which the software has prepared for us. And the very first thing that's going to give us is an opportunity to review what we have. Let's review that we have $3,000 in that main account. I've got $2,000 in my savings account. I can see the income that's coming in from the gentleman and from his wife, and they both get paid twice per month. I can also see the consumer debt of the car loans, the student loan, and the credit card. And then I can begin to see the household expenses listed. And then at the end of the household expenses, we have a section for the mortgage. We're not using the consolidation at this time. We can also see down there at the bottom that in the future, from a wealth accumulation perspective, we've got that money market account. And once the mortgage has been paid off, the mortgage debt that is, and the house is paid in full, we'll begin a mortgage investment, meaning the funds that we would have spent on paying the mortgage debt off will now use the same funds to make the mortgage go forward. And it has confirmed down at the bottom, there is $1,583 available. However, we're making a choice to limit that to $1,200. We then hit Calculate Plan. It will then say, be patient while the math is being calculated. However, it doesn't take very long. And then eventually you'll come back with your dashboard. Now, one thing that I will point out is that the free analysis that was performed initially is a little bit of a thumbnail sketch. We've now provided so much more information and so much more detail that we can create a much more accurate vision for the future. For example, you may remember that the mortgage debt due in the free analysis was going to be around 16 and 3/4 years, and we can see here now we've actually been able to shave that even more. It's now down to 12.16 years, and that's because we've been able to change the data and be able to be more accurate with our expenses. Okay. You'll also see the graphs that we are familiar with, the red line traditional method, the blue line being the debt reduction based on the accelerated method, and then the green line is the potential for the wealth to grow. We can also see the difference between the green column showing our income, the red column showing our expenses, and the discretionary that is available to us. Now, because of the dates that we added, it turns around and it tells us, based on this example of the 24th of July, that guess what, Mr. Test Customer, your cable bill is due today, and it's $80. And so we would transact that transaction to make sure that our cable is paid for. And this is the way we would do that. Having hit the transaction button, it will come up, it will provide you with a date, we'll confirm that it's coming from the checking account, it's going to be paid to the cable company. The budgeted amount was $80, and that's going to be our actual amount too. And I'm old-fashioned, that particular bill is going to be paid by check, and it's going to be paid by check number 12. So we did that, and we filed it, and it's now listed as an action which has been transacted, but not yet reconciled. Okay, so the mechanics have taken place, but we haven't had the reconciliation process to recalculate. You'll see here at the top on the top board here, we have a list of menus that are available to us. We were in dashboard a few moments ago. We're going to go into reconcile now, and we're going to perform the reconciliation process, and we'll click on the start reconciliation process. Once again, it asks us to be patient, though it doesn't take very long. And then it automatically takes you back to the dashboard, and we can see that that transaction has taken place. We have more transactions coming up on the 25th, 26th, 27th, 29th, 30th, 31st, and we can see that there are funds which are due to come in on August 1st. Let's look at another tab there. There's a tab there for reports. This can give you an updated, and in fact, there is a time of update. The last time that the software was recalculated. We can look at the balance on our wealth acceleration. We can see the red line traditional. We can see the blue line wealth acceleration, and we can see the potential for wealth growth. Once again now, we have more accurate information than the free analysis, purely and simply because we've added more data. We have now taken the main mortgage, which was planned to go over a 30-year period. We've now got it down to 12.16 years. And so instead of paying off in 2046, we're going to pay it off in 2028. And the amount of interest is going to reduce now that we actually pay. And you'll notice too that by accelerating that period, we're also accelerating the interest saving based on the free analysis as well. It's saving us more money. Looking forward, we are beginning to put $100 a month away, and so in the 30 years time, we will have $49,000 in our money market account. And in 2028, when the mortgage is paid off and we begin using the same amount of funds in the mortgage interest, we'll be, if we would be looking for an investment that's going to have a similar yield, we'll be looking to have a fair nest egg of capital set aside in addition to the house being paid for. And clearly that's what we're trying to do here, ladies and gentlemen. The primary function is to have wealth accumulation through debt elimination. So instead of in 30 years' time the house becoming yours free and clear, but with no savings, what we're trying to say is, let's have this, in this example, let's get this house paid for in just over 12 years, and then let's spend the next 18 years accumulating wealth. Additionally, you'll remember I'd got that little savings account which I'd got $2,000 in. If I put $100 a month away in 30 years' time, I'll also have $38,500 there too. This is a nice graph because, once again, it reminds us of the green money, which is our income, which is received on a monthly basis. It shows us the red amounts of expenses going out and the discretionary that is available to us. And I scrolled down slightly to show all of the expenses which I have built into this Mr. and Mrs. Test Company, or rather Test Customer. Here's the wealth acceleration chart which we're familiar with. And we can see how the red line traditional versus the blue line accelerated method. This is an interesting comparison. I really like this chart because it compares the amount of principal that is being paid and the amount of interest. And on the left-hand side, we have the traditional method, and on the right-hand side, we have the wealth acceleration. And I appreciate this because it shows how swiftly the sum can be paid down. And I particularly like it because it shows how much of the principal we are paying and how the interest in comparison, the difference paying $79,000 worth of interest instead of $182,000 worth of interest. But more than that, it also shows that there is a very real benefit for us to be able to do this, even after 4 and 5 years, that the amount of balance changes dramatically. We can say that, for example, in year 7, instead of having a balance outstanding of $155,000, we've actually got a balance of $119,000. We can say that by year 10, instead of having 144 out of the 175 outstanding, we're down to 55,000. And I think that again shows the power of the accelerated payment. And we have to acknowledge here, the debt isn't going away. It's just that we're going to use the discretionary. The software is going to tell us to pay extra amounts out of the discretionary. Similarly, let's look at the consumer debt, the car loans, the Visa card, and the student loan. The algorithm has gone in here and it's taken a look at what is the best way for us to deal with these loans. We can see that we can make some savings on the number 1 auto loan. On the number 2, it's suggesting just go with it the way it is, and the reason being is that because of the principal involved, the sum that's outstanding and the interest rate, it's probably just as easy to let that ride. However, what it is telling us to do is to look at the student loan. We can see how some of these loans are going to be attacked more aggressively than others by the gradient of the graph. The Visa credit The credit card is 13%. Now the APR on most credit cards is probably 23, 24%, who knows, and the sum is relatively small, and so it's saying because of the sum involved you may want to let that ride for a longer period of time. This is the mortgage interest investment, meaning this would be once the mortgage is paid for, once the debt is cleared, which we anticipate to be in 2018, September specifically, we want to go out and find an investment that has a high rate of return and be placing around $1,000 a month into it and seeing that grow over the remainder of the period to 2046. Also, I've got that little money market account. I don't know whether you remember earlier on in the example, we said that we would put $100 away per month, and over a 30-year period, that's going to give us a final balance, which is pretty handsome too. So looking at the rest of the menus, we can click on the tab here, the main tab. We can edit your personal information, change your username, change your password, confirm passwords, email addresses, anything else that you may need to change. One of the other things that I like down the bottom there is a preference. If you have daily actions where the software is going to notify you that there are things that you need to do, you can be notified on a daily, weekly, or monthly perspective. On the drop-down menu, you can choose. You can receive notifications by email and by text as reminders of these are things that you need to do. The next menu along is to edit the financial. This is the one that you'd be using regularly, particularly in the expense side. You can go to the right-hand side. You can click on the edit button of each specific category, each line item, and make adjustments as is necessary. And I'd recommend that every time that you do an action that you perform the reconciliation, which is the next tab along. And once you've updated some data, it's a good habit to reconcile on a regular basis. The other reason why that I like to reconcile on a regular basis is if I do a mass number of changes and and inadvertently make a mistake, it's harder then to go back and see which is the one that caused the problem. So I like to do it in small increments. We have the opportunity as well from a business perspective. For no extra charge, you can create a business account. So if you have a business interest, this is a way that you can use the same type of software for your business. The next one to the right is what if. This is a really useful function, what if. The idea is that you can create a what if scenario. Maybe it's a new household expense. Maybe it's a change in your circumstances. I'm thinking about joining a gym. The gym subscription is going to be whatever. How is that going to look in my budget? I'm thinking about changing my car. My additional monthly cost for the lease is going to be, what's that going to look like going forward? It's a really useful function. This area is the tutorials. Once again, we have 12 tutorials that will walk you through various elements of the software. Last one I want to show you is the one on the end. It's tools. We can set up a daily task list, appointments, calculators, and there are a number of tools which are there which are for your convenience and for your assistance. As I'm closing this presentation, there's a couple of statements that I want to make. First of all, your data is private and it won't be seen by MonyWize associates. I'd like to point out as well that you didn't enter any bank details, no account numbers, no routing numbers. There was nothing there which is private that is in any jeopardy. No meaningful private information is in jeopardy because nothing of that nature is being stored. And just to finalize, we are using this proven financial strategy to help our clients achieve their financial goals. The software is proprietary. It's been used for a decade, and it is very successful. It is proven. If you are a customer, and if you are looking at this for the first time, use the web address that belongs to the person who is showing you this presentation. Whatever their username, .moneywize.com, is the way that you should log on. And by using that unique web address, we at MonyWize will be able to know who introduced you. And with that, I'd like to say thank you for listening. By all means, if necessary, repeat this presentation. You can rewind and fast forward as you wish. You can also take advantage and look at the other tutorials that are available to you. I can honestly tell you that this product is a life-changing product. Thank you for listening to me. Good luck to you.